Hi, I'm Mark King, investment editor at Columbia Threadneedle Investments. Clearly, following the result of the UK general election, the political way forward is difficult. But from a market perspective, it's an ambiguous result. What we do know is that markets hate uncertainty and there'll be volatility. So far, the strongest reaction has been in sterling. And this is likely to continue to be the case. There's an important translation effect for earnings, given the international earnings base of much of the UK market, which will benefit from a weaker pound. Remember, the UK stock market is much less reliant on a domestic economy than in previous cycles. A number of stocks that could be vulnerable under a more interventionist government have been weak for some time, such as those in the transport and utility sectors, so this isn't coming from a clear blue sky. Gilts, or government bonds, have managed to retain their safe haven status through a number of political events in recent years. But non-residents accounted for just under a third of demand for UK government bonds in the fourth quarter of 2016, and they've been hugely supportive of the market. Any reduction in international investors' appetite for UK assets would constitute a risk to gilt valuations. We don't expect the Bank of England to respond directly to the result, but it will be keeping a close eye on consumer confidence, particularly if the decline in the value of sterling extends further from here. Beyond that, it's hard to draw firm conclusions regarding growth and spending at this point. While they've been reasonably resilient since the referendum, we have seen a definite softening more recently. UK consumer confidence appears to be running out of road, and we're likely to see further weakening of the UK economy, which will hit over-leveraged households. And then we come to Brexit. The election result has reduced the likelihood of a hard Brexit, and this is likely to be economically positive for the UK and Europe. A softer approach to Brexit could, for example, see potential structural support for sterling down the line. It seems reasonable that any Brexit deal will now be subject to greater parliamentary scrutiny, and the government is more likely to seek to retain some elements of single market access. Confidence in the UK now hinges on how quickly a new government can be formed. With diminished authority, it will be difficult for the government to do very much at all, and uncertainty is likely to dominate for as long as the position remains unclear. With no outright winner in the election, it's time for all players to sit down and attempt to achieve a coherent strategy. We need to wait and see what kind of cross-party approach might be viable. See you next week.